You are listening to chartingwealth.com for Thursday, the 21st of May, 2015. What are we looking at here? This is IYY, the Total Market Index Fund. We see that over the last 6 days, these are two-day candlesticks. What is a candlestick? It is a representation of what the stock, the index, the commodity, whatever it is you're tracking has done over the last period. Our period here, each one of these candles represents 2 days. So we see 6 good days of up movement. Today's candle ending in a nice good up movement. That's what the top of this candle means. That little green wick on top shows how high the market went. The green body shows where it stopped. So it stopped at about 107.70. So what we are seeing in this total market fund is a continued up movement of the total market. We have something called the moving average convergence divergence. It is a formula that we represent graphically on the chart. It crossed over going up. That's this blue line, which is the MACD, over the green, the exponential moving average, the 8-period moving average line. That gives us a good signal to show, as you can tell, it crosses over. What do you see happening? You see the movement of the price going up on our price chart. We also have these boxes behind, which are light red and green. They are called derivative oscillator. And that derivative oscillator also crossed over the last 2 days going up. Now let's drop back from the 2-day chart to the 4-hour chart. This is interesting on the 4-hour chart. What do we see? Well, we see on the 4-hour chart that we actually have reached our highest high somewhere back actually on the 18th. Isn't that interesting? It has not really gotten a lot higher than that. We can see the beginning of the day was a little drop off on the 20th, and it didn't really go up much higher. Now it did technically end up 0.11%. But we could see a topping off the total market here. Now, we won't have any confirmation until we have a crossover going down, at least on the 4-hour chart, and a breaking of our 2-day trend line, which we do not have. So in the IYY, we are still in an up movement. Now, let's go from IYY, which again represents the total market. Let's back out again to our 2-day chart. And let's go to SPY. What is SPY? Well, that is the Standard & Poor 500, and we need to redraw our trend line to set it up for the new candle, which we do quite easily. We're connecting the bottoms of 3 up-moving candles. Again, it crossed over. The S&P did a little earlier than the total market back on the 12th. That candle between the 12th and the 14th. Again, this is a 2-day chart, 2-day candles, and we see continued up movement. Derivative oscillator, like the total market, switched over 2-day. Let's back up on that and look at the 4-hour chart. What do we see again? We see sort of a topping off. Now, we also see a converging, that means coming together, of the MACD, the moving average convergence divergence. We don't have any crossing over going down, but it does look like it could be topping out. Now, it could be gathering its energy to move up again. We don't know for sure. We sure liked the movement between the 14th and the 19th a lot better than what we've seen on the afternoon of the 19th and on the 20th, so keep an eye on the SPY. However, just like the IYY, both of them are in uptrends on the 2-day chart and on the 4-hour, the half-day chart. Now let's go from SPY over to my favorite chart, and that is, and technically the SPY was down 0.07%. That's not even 0.5%. Now the Qs, that is the NASDAQ 100, that's what it represents, the tech stocks. It is, and we didn't revert over to our 2-day, let's do that. On our 2-day chart, we can also see that that is in a good uptrend. Oh, there is nothing breaking that. We can tell when we look at the MACD itself, it crossed over right after the 14th. It is continuing to diverge, move further apart. However, the derivative oscillator is not crossed over yet going up. We do want to, at this point, switch over now to the 4-hour chart. And again, on the 4-hour chart, we are seeing A little bit of topping off too, although I will say that the highest high was today, not several days ago. So again, we ended the day on the Qs up 0.06%. So all three of our indexes are going up on both the 4-hour, the half-day, and the 2-day chart. We do see a little bit of converging on the 4-hour chart on the Qs, like I believe we saw on the S&P. So again, and the derivative oscillator is in the green, but it is falling off. So again, watch the Qs throughout the day on Thursday. Now, lastly, let's range back out to our 2-day chart, and let's see what gold will tell us. Gold was up 0.16% today. Now, gold is interesting. Looks very similar to what we saw yesterday. This, again, is a 2-day chart. Gold has broken the 2-day trend line that we had drawn. We are still technically in an up move for gold, although it closed up on the day 0.16%, but the movement is well below the high back on the 2-day candle on the 18th. So no significant movement whatsoever in gold. Let's go on gold and look at the 4-hour chart, and you can tell where gold reached its peak at 4 p.m., the closing on 4 p.m. on the 18th. That has moved down substantially. It did technically move up a little on the day itself, but overall it is significantly lower. I mean, it is $1.20, $1.15 lower from where it topped off, maybe even more than that, $1.50 lower than it topped off back at the close of the market on the 18th. So watch gold. It has crossed over going down on the MACD, and the derivative oscillator is down. Now that again is on the 4-hour chart, not on the 2-day chart. We look at the 2-day chart, derivative oscillator increased today, and we don't have any significant converging of the MACD. So technically gold is up on the big chart. It has crossed over going down on the 4-hour, the half-day chart. So keep an eye. It has also broken our 2-day trend line on both the 4-day and the 4-hour and the half-day, the half-day and the 2-day chart. So that is where the market has ended. When it comes to the ending of the market on Wednesday, this is what we're going into on Thursday. So pay attention. Know what's happening in the market. Use that to your advantage as you look what to buy, what to sell, what to trade. Thank you so much for joining us. We appreciate you tuning in to chartingwealth.com. We're always happy to have your comments, questions, concerns. Let us know what we can help you with. God bless. Great trading, great investing.